Most Americans think the Federal Reserve protects the economy, stabilizes markets, keeps inflation under control, prevents crashes. But what if the truth is far simpler and far darker? What if the real purpose of the Federal Reserve has nothing to do with protecting ordinary people and everything to do with protecting the system that keeps them dependent? And what if this institution, the one Americans never voted for, the one that operates in the shadows of financial power, quietly decides who wins and who loses in every economic cycle? Welcome to the financial injustice. The Federal Reserve is sold to the public as an independent central bank, a guardian of economic stability. But the Fed is not independent, and it does not serve the public. It serves the system, a system built on debt, inflation, and perpetual dependence. To understand how deep this goes, you have to start with the structure itself. The Federal Reserve is not truly government, and it's not truly private. It sits in a gray zone, a hybrid with just enough distance to avoid accountability and just enough authority to reshape the lives of 330 million Americans with a single decision. Interest rates up, inflation changes, mortgage costs change, rent changes, job prospects change, asset prices swing by billions. Interest rates down, the stock market inflates, companies borrow more, speculation grows, debt explodes. Every shift the Fed makes sends shock waves through the economy. And none of those decisions need your approval. They don't need Congress. They don't need a vote. They don't even need to explain themselves in a way anyone can truly challenge. This is not democracy. It's monetary authority without public oversight. And the injustice begins here. While Americans think the Fed is stabilizing the economy, the Fed is really stabilizing the architecture of debt, the engine that keeps the entire nation locked in a financial loop. Think about the world before the Federal Reserve existed. Before 1913, America experienced booms and busts, yes, but markets corrected themselves faster. Money had limits, banks had limits, governments had limits. When paper money wasn't backed by promises alone, the system couldn't inflate itself without consequence. That changed the moment the Federal Reserve was created. For the first time in American history, the government had access to a lender with unlimited money. Money created from nothing but confidence and political necessity. And once politicians realized they could borrow endlessly, spend endlessly, fight wars endlessly, and expand programs endlessly, the age of restraint died. The age of controlled illusion began. The Fed became the backstop for every crisis, not to protect Main Street, but to protect the financial system from the consequences of its own risk-taking. When banks gambled too hard, the Fed rescued them. When corporations borrowed too much, the Fed lowered rates to keep them alive. When asset prices inflated beyond reality, the Fed printed money to prop them up. When the government ran out of cash, the Fed bought its debt. Every rescue solidified the same unspoken rule. No matter what happens, the system will be saved, even if the people are not. Look at 2008. Millions of Americans lost their homes. Families collapsed. Retirement accounts evaporated. Jobs disappeared overnight. But the banks that caused the crisis? They were bailed out. Fully. Immediately. Aggressively. The Federal Reserve stepped in and bought toxic assets, slashed interest rates, and pumped trillions into Wall Street. Ordinary Americans paid the price. Wall Street profited from the disaster it created. That wasn't protection. That was preservation. Preservation of a financial order where the top cannot lose. And the pattern repeated in 2020. Markets crashed, jobs vanished, businesses closed, people lined up for food banks. The Fed responded by injecting unprecedented amounts of liquidity into the financial system, money that skyrocketed asset prices, enriched the wealthy, and inflated everything from housing to stocks to corporate valuations. Meanwhile, wages lagged behind. Inflation wiped out savings. Half the country fell into deeper financial insecurity. Again, the system was rescued. People were not. The biggest lie the Fed tells is that inflation is a natural byproduct of growth, a necessary part of a modern economy. But inflation is not natural. Inflation is engineered, a deliberate side effect of endless money creation and government debt. When the Fed prints money, the value of your savings falls. Your paycheck buys less. Your rent consumes more. Your retirement shrinks in real terms. Your future becomes more expensive. This is not a mistake. This is the mechanism. Inflation is how the government pays for its debt without ever admitting it. A hidden tax that nobody votes for, nobody debates, and nobody can escape. And yet the Fed frames it as target inflation, as if slowly eroding the value of your money is a responsible policy choice rather than a quiet theft. The injustice is simple. The Fed prints money to solve the government's problems, and you pay the cost. But the deepest truth about the Federal Reserve is not its power over money. It's its power over timing. The Fed decides when the economy overheats. The Fed decides when the economy freezes. The Fed decides when recessions begin and when recoveries can actually start. The Fed decides which institutions survive, which fail, and which industries receive oxygen. Imagine if someone could decide when it rains and when it stops, and they only opened the sky when it benefited the same group of people every time. That's monetary control, and that's the real role of the Federal Reserve, not to represent the American people, but to manage the financial ecosystem that prioritizes stability for institutions over stability for individuals. Wall Street gets cushions, corporations get bailouts, banks get liquidity. The government gets buyers for its debt. You get higher prices, slower wages, rising interest rates, shrinking savings, and a system that tells you to just be patient while your cost of living outruns your income. That's the imbalance. That's the injustice. But here's the part most Americans never question. If the Federal Reserve is so powerful, so essential, so central to the economy, why does it operate with less transparency than the agencies that regulate restaurants or barbershops? Why does an institution that controls the entire monetary system face no elections, allow no public votes on its policies, release only carefully worded statements that hide more than they reveal, and meet behind closed doors where trillion-dollar decisions are quietly shaped? The answer is unsettling, because transparency would expose the truth. The Federal Reserve does not serve the public. It serves the system, a system that requires inflation to function, requires debt to grow, requires risk to be subsidized, and requires ordinary Americans to keep paying for the consequences. The Fed's real job has always been the same: to make sure the financial order never collapses, even if the people living inside it do. And once you understand that, you stop asking whether the Fed is doing a good job, and you start asking who it's really working for. Because the next recession, the next crash, the next inflation wave will not fall on everyone equally. It will fall hardest on the same people who always carry the weight: workers, middle-class families, retirees, savers. The people who don't get bailouts, don't get liquidity injections, and don't get rescued when the system breaks. The Federal Reserve isn't the guardian of the American economy. It's the guardian of the architecture of debt. And the sooner you understand that, the sooner you can see the system for what it is, and what it will never be. If this made you question what you've always been told about the Fed, subscribe. Because in a world built on financial injustice, knowing who the system truly serves is the only protection you have.